All right, good morning. Welcome to the New York session. I hope you're doing well. Apologize for being late. I was having a little. Yesterday, we had a session, and during the session, I think price was here, and I was expecting them to at least straight to this candle's low and then aim for this high. But during the session, during the New York session, price completely gave up, which it's normal because we were trading above a high, right? Anytime we are trading above a high, the probability of price retracing is high. So we have, and also it was Monday. So Monday, if you're expecting higher prices, price goes down. Tuesday takes out Monday's low and then reject and then we go higher. So it's normal price action. Just that the movement was unexpected. I didn't expect them to completely, maybe a pullback, reacting off from this same level, which is, go to the daily, reacting off from this same level. Whilst we were here, price pulling back into that volume imbalance and then going back up. So I didn't expect them to trade completely through, just like here when he pulled back and then it went up. That's what I was expecting, for them to pull back and then go up, but they completely went through it. Now, does that change the entire narrative of what I was expecting? Not really. It doesn't change it, because from the weekly perspective, like I said, we did close bullish the previous week, right? So I'm expecting them to basically go up. Plus, where we are, this low to this high, that is the optimal level, which is OTE 618. Okay, so if we are not going up, then we will entirely come back down to attack this low, which obviously I'm not expecting that. It can happen, but I'm not expecting that. So I'm going to be expecting higher prices today. Maybe consolidation to higher prices. Hence, you're going to be focusing on this landing session fair value gap. We took out yesterday's low, in London, and then we expanded up in London. So this gap is going to be relevant. And on the upside, we have this candle's low and then that fair value gap too. Let me take this one out. So that's why I said upside to consolidation, because it can get here and then it'll be a battle, right? So and apart from that, the fact that we are still in the first week of January, that is also a factor. Like I said, I've mentioned it with the ES. Every beginning of the year, at least, we need to allow the market to do its thing for the first 2 weeks. Okay, so between 5th to 9th and then 12th to 16th, those first 2 weeks, price can be a little bit erratic, meaning price can do a lot of back and forth, simply because it's the new year. Okay, and definitely if you have a lot of money and you're looking to trade for the year, you're not gonna straight jump in. Okay, you want to allow the market to present some opportunities. So right now, technically speaking, there is nothing, because all of this is just noise. All of that during the Christmas period is just noise. Okay, so we need proper price action after the Christmas period, and then we can work with that. Okay, so we need proper price action to start working with it. Hence, maybe real price action will come in from next week rather than this week. Beside that, we also have this weekend on Friday, we have the NFP, right? So on top of that, it makes predicting price for this week not the easiest, but yeah, we can work with this fair value gap, technical speaking, right? Not data. This is technically speaking, because data wise this is noise, because I don't think we have a lot of I would say smart money involved in the market as it stands right now. So this is just technical move. So we can work with this fair value gap, and then this candle's low and the fair value gap. Okay, and we'll see what is going to happen. So when price trades back here, from the H4 perspective, they've gone above this up candle, right? So we can look forward for price to trade to this. That's the candle's low, this one here, and then the gap. Okay, so on euro, same thing. The opposite is true for euro. And again, I prefer I think yesterday I gave an idea on the British pound, and they completely wiped it. Now on British pound, it's understandable because this was dropping. Okay, I think I spoke about that yesterday, that they were going to attack this low, which they completely did yesterday. They did that, all of that yesterday. So when this is dropping, definitely the British pound will go up, and with the dollar index going down, it accelerated this move. So if you took a trade and you got stopped out, which I'm not taking any live trade, but I took the demo trade on it on the 15 minutes when it got here. Let me see if I can show you the trade. There it is. I personally took it, but on a demo, okay, because I'm not trading live yet. I took it here with my stop loss there, and you can see it stopped me out, and then I just forgot about it. Okay, so I'll see with euro, because I think euro will be the best on the H4. Now I like the immediate close. Okay, so similar to the dollar index, if we pull back on the euro, then you can use the London gap. You can use the London gap and then take a trade to this one, this candle's high, 1.16920. Again, with the stop just above, I think the up candle, because there's no point going beyond that. But I'll prefer, for now, demo trades. Okay, do not go live yet. Just practice for now, and then after maybe the first 2 weeks, that's when you can actually start trading live. For now, no live trading, because again, it's too early of the year. So this gap to here, that's all. Okay, because this is also an important price action, so they can use it. If we come back down, they can use it to go back up. Okay, and then leave the British pound alone, because the British pound doesn't have the same price action as euro. Okay, this one is making sorry guys, my wife came in. Yeah, anyway, so yeah, leave British pound alone. The reason why I'm saying leave it alone is because this is weaker. Okay, the euro is weaker, British pound is stronger, so go with the weak one. Okay, euro pound. Now euro pound, from the 3 months perspective, you've just attacked this 3 months low, so we need more data. Now on the H4, it looks like it's almost 26 minutes to go, and we'll close above this down candle. If it can, again, that would be something you something you can play with. Okay, you can play with that. Maybe I think it's already even doing it. It didn't leave any gap, but we are above the London last up candle prior to the move down. So you can use the H4 and then place a buy limit on this candle's high with your stop below that, and then just aim for 221. Again, just demo trade, do not trade live yet. Okay, now the idea is coming off from using the 3 months low as the level, right? We need a reference point. So since they are taking out the 3 months low, you can use that. Okay, and then aim for 221. That's if the candle closes above. If it does not close, then don't do anything. I think I gave something similar to yesterday on gold, that if that candle closes below, then you can take a trade. If it doesn't, then you don't have a trade. Okay, so always make sure that is the case, because the closing makes it's like when it's able to close above or below, then there's a significant change. If it doesn't, then there's a rate. So same thing here, right? If we close above, then there's a significant change, then you can trade with it. But if it doesn't, then don't do anything. So that's what happened with gold yesterday, and the opposite happened. So this is what can be done or could have been done yesterday. The fact that this did not close below, but then they closed above, then you buy that, because what happens on the lower time frame is that we've gone down and then gone up. So the high of that H4 is going to be a breaker, so you buy that one. Okay, now I'm not saying go and buy gold, no. I think technically speaking, we need to come back down unless we break this high. Okay, so today being Tuesday, maybe a run above Monday's high, and a rejection can lead to price coming down, but I don't like this rejection. Okay, we need a bit more more of a distribution, aggressive move to the downside. Okay, so you can play with the 1 hour auto block. Again, everything today is just demo. Okay, do not trade anything live. Okay, you can play with this 1 hour auto block and then see what will happen. If not, then wait for the H4. H4 is more meaningful than the 1 hour, and then aim for this gap. Aim for them to trade inside this gap. That's all you're doing. Okay, so you're looking to trade from this to here, and that's it. Now if the H4 is able to close, not this one, okay, the next one, if it's able to close aggressively on the downside, then you can use that. All right, because where we are trading in premium relative to this range, to this high, to this low. This high to this low, right? We are trading at exactly 70.5, so we might get a rejection. All right, okay. Crude oil, I think that's the only one that actually did something interesting. Yesterday I made mention that during the New York session you can look for the buy to go up here. Our first was here, and then this high. Then we are likely gonna break it. We are likely gonna break it and go up here, right? I think I was using that one. So they've gone for this high. Now it's heading for that fair value gap over there. Then eventually, if what I'm seeing is right, then they might break it. Now again, all demo, you can look for buy to continue going up, but the real buy will be probably from 2 weeks from now, when we've had like a substantial move, maybe breaking above this high. If we break this high, which is this up candle, or price level wise 60.50, that is when we have a green light to start looking for the buy for the seasonal move. And looking at the weekly time frame, there's literally nothing here. Okay, on the weekly time frame, there's no fair value gap. So when we start going up, it's gonna be maybe aggressive. It might be aggressive move because there's nothing holding price in terms of fair value gap. So the only places that we might get some form of reaction is going to be the order blocks. The only places that we're gonna get some reaction is gonna be the order blocks, and inside the order block, that's why I've highlighted the fair value gap in them. So the only place you have trouble will be here, and then maybe somewhere there. But gap wise, you can see they've rebalanced all the gaps. So here there's nothing, here there's nothing, here they've rebalanced, here they've rebalanced, there's nothing, here there's nothing. So if we start going up, it's gonna be probably aggressive. Who knows, maybe it might tie it up with the news event that probably circulating about Venezuela. I don't know if they produce oil or not. Let me double check. But yeah, I think Venezuela does, they do produce oil, so or that country has got to do with oil, so they might use that narrative, right, to push oil up. Okay, they might use that narrative to push oil up. So let's see in the coming few days, because they might justify why price went up, and it's seasonal. Okay, it's not going to be because of the news, it's going to be because seasonally price goes up between January to April. Okay, so it will be a very good I think pair to be watching for January to April. Okay, but I want them to break this up candle first before we can actually look into it. If you want, like I said, you can play with it now, and then obviously once we break the up candle, then you can look for the actual buy. Okay, okay, now let's move on to ES. Okay, so ES yesterday, I was expecting them to move from here and go down, but again, that did not work. It's understandable why, because Again, it's early January. Now, if you are new to trading, this might look very new to you, but OGs knows that January first 2 weeks, you don't play around, because price can do anything. There are some technicals that will fail, not because I would say algorithm doesn't work. It's because it's early year. Now in early year or the new year, anything can happen. Okay, anything can happen. Price doesn't actually respect technicals, or doesn't respect, or I would say sometimes doesn't respect the PDRAs. Now, from what I gathered from obviously mentorship from ICT, when price trades to PDRAs, they don't automatically move in that direction, right? Someone has to take advantage of it. Okay, I would say someone in smart money has to take advantage of it. Now, if smart money is not involved in the market, price can trade to a PDRA and nothing will happen, because whoever will put money in during that time, because we are using time and price. Now, the time is important because that's the time, quote unquote, the people with enough money, okay, that's when they sit and trade. Okay, all right. For example, with the S&P 500, between 2 p.m. and between 2 p.m. and 5, that is the AM session, right? The AM session. So the big boys, that is the time they play in the market. They don't play in the market 24/7. They have specific time window they play. So between 2 and 5, that is when they will play. So if they were in the market, right, then that level, this one here, right, because something happened. Someone sold here. Because if there were no selling, then this wouldn't have happened. So someone sold there. And price coming back will mean there is going to be some form of reaction at the same time. But nothing happened. Okay, meaning there is no one willing to participate in any trade yet. That is why I'm saying just wait for the first 2 weeks, because after the first 2 weeks, smart money or people that have money will start being greedy again, right? They've spent all their money during the Christmas, so they'll come back and want to make more. Okay, so give it time till 2 weeks time, and then the market should be back, and these levels should give us some form of reaction during the time of the day. Okay, and January to March, this pair usually gives a drop. It usually goes down. Okay, it goes down together with the yen, but we will see. Okay, so let's move on to the Australian dollar. Yesterday I was talking about this level. I could have sworn that this down candle, right, was gonna close below. That was the referencing point, that down candle was gonna close below this area, and then price will go to the next one, but it couldn't close, and then price came back up again. Now from the from the daily perspective, this should create a a divergence. Okay, this should create a divergence because this move here is not expected. Okay, and we will see during this New York session if we will break the down candle, this one here, and then we will expect them to trade down again. So keep an eye on this down candle, and then the fair value gap, London fair value gap, from here to break this, and then come and trade inside this candle's high. Dollar yen also completely dropped. I think during the New York session, I was expecting them to break this up candle and then go back up, which I still think that might be the case. Okay, this down candle here is the reference point. As long as that down candle exists, we need to come up here. Okay, so this is all noise. You can see there's really nothing going on in here. That's the Christmas period. So I'm still looking forward for 157.89. Maybe wait for a H4 immediate close. I thought this candle was gonna close by that, it didn't. Wait for H4 immediate close, then you can use similar to what I showed on this. If the H4 closes, right, if you get something like that over here, then you can use that. Okay, all right. So that is that for these. Now let's go to the cryptocurrencies. So with the cryptocurrencies, I'm still bearish, like I said. Now I think price has just tapped into the previous month high. I'll be expecting the rejection very soon. I'm not buying this move. Look out for this to reject price. On the 3 months we have closed, so we are, I would say, officially probably gonna be going down to attack this low here, and we might come down more depending on how we trade this candle. Now this is the last down candle prior to the move up. If they're able to go below it, which as it stands, they've gone below the opening price, they've gone below the mean threshold, the middle. So it's a little bit, I would say, on the edge of showing more move to the downside. And I did show exactly where, if we get that, where we're gonna go. We'll be trading inside this range. If we break this, we'll be trading inside this range. And it might not be a good thing for our crypto traders, but it is what it is. Okay, you just have to go with the flow. You don't only make money when it's going up, you also make money when it's going down. So you can trade the down movement. You don't have to necessarily always trade up. Okay, so yes, watch out for this fair value gap. Now in terms of trade wise, on the daily, simply wait for the daily to give you a quick drop like this, an up candle with a sharp move down. Once you get that, then you can start looking for lower prices, or even the weekly. If the weekly gives you up candle with a sharp move down, closing immediately below the previous candle's low, that is your confirmation. Then you can start looking. From there you can actually sell and forget about it. Okay, if we get the weekly one and you get a sell, forget about it, because it's not coming back up anytime soon. So watch this area within the monthly gap, this one up to there. This is the most important level, so they might reach for that and then resume coming back down. So see this area as distribution happening. There is selling going on in here. Just as when price is going up, they will consolidate and then push up, consolidate and then push up, consolidate them. When it's going down, it will do the opposite. It will consolidate and then push down, consolidate and then push down. We call it distribution. So that is what is taking place over here. So the same narrative goes for the Ethereum market. It might go for the previous month high, this candle's high. It might get there, it probably might not, but yeah, this down candle will not be broken. This one will not be broken, so they might maybe even touch this low here and then resume going down. Okay, Solana, same thing. This candle's low or this area, I think that's the monthly gap right here, then price will resume going down again. So watch that. Or to make everything easier, watch Bitcoin. If we get the immediate close either on the daily or weekly, whichever comes first, that will be your clue that price is now about to go back down. XRP, that one, leave that alone. Hype, same thing, we will come back down again. Maybe we might not even go up much more, because this gap here is going to hold and then send it back down again. We are in distribution phase. We are selling to go down. And then finally Chatsky, we will see a continuation to the upside to trade here, likely trade there, and then we'll see what will happen next, because this one is coming from the all-time low. So we might not go all the way down, but probably consolidate, because the weekly time frame, the monthly time frame has confirmed a swing. So we might not be coming down here soon. We might just come back, touch this, and then maybe stay there. Or the highest probability is upside. But the fact that Bitcoin is likely going to go down makes this either sideways or up. Sideways or up. And then finally, the AI16Z, we are still stuck inside that fair value gap. Let me see if I can show you, because I think I keep talking about it, but I've not actually shown you the chart before. But let me see if I can. There we go. So this is the chart that I've always been referring to, right? So this is the gap that I was talking about, the big move that happened after we went below the low, and then that created a gap, and we are currently sitting inside that gap. Okay, so let's see what's gonna happen if price can reject the gap and then go up. We will see. Okay, because that's all-time low. That's the lowest that it can go. So that's why I kept saying we might see something like what what Chatsky did after going for that low. it gave a big rejection from that low. So let's see. Okay. All right, so that is all I have for you for today. Again, we are slowly coming back. The market is not fully, I would say, fully open yet. So do not be in there aggressively looking to trade. If you do that, you're gonna hand yourself to the market. So just be patient, give the market room to breathe, and then in maybe 2 weeks time we can start actually trading properly again. All right, so that's all I have for you for today. I will see you same time tomorrow for another session. Take care and have a wonderful day.